So you've been searching for homes and you've looked at many homes and none of them fit exactly your needs. And then it's that one day that you go through Home Depot or Lowe's and you look and you're like, we could just build this home, but you don't know where to start. So in this video, I'm going to cover with you the full details of a construction loan, what it consists of, common questions that I get asked. Hey, before we jump into it, do me a favor. If you like my content, if you like finding out information in regards to the mortgage process, go ahead and hit that like and subscribe button, and feel free to share this with someone. So, construction loans. I'm being asked more and more about construction loans. What do they entail? And the answer is there's a lot of different varieties when it comes to the construction loans. The most common is when you potentially already own the land and you want to build and you work with a local bank to do the construction loan, and then you turn and refinance that down the road. However, there are other options that you can do. A lot of people are unfamiliar that you can use an FHA for a construction loan, or a VA for a construction loan, or even a USDA for a construction loan. So there's a lot of different options out there. But let's get started on what questions you should be asking first, and the common questions that I get. So number one is, how do you even get started? Where does it go? And my first question is, do you own the land, or are you going to be purchasing the land? Because with most construction loans, you're going to have some sort of down payment, unless you're in a scenario, it's a USDA, or if it's a VA. Now you'll still have your closing costs that you have to consider. So let's talk about the two different types of construction loans that are commonly out there. There is a one-time construction loan and there's a two-time construction loan. The one-time construction loan goes ahead and it has a period of time to allow for the completion of the home. Generally, it's about 12 months. During that time, you're going to work with your contractor to get the home up and going, and then at the end of the 12 months, you're going to go into a modification period that will finalize the terms of the loan. Now, a lot of people say, well, you don't have closing costs twice, and that's not 100% accurate. There's still going to be some fees at the modification, such as setting up your escrow now that the home is fully completed, and then depending on how you've negotiated the term, you may have locked in an interest rate at the time of construction, but that could possibly be modified if you wanted to buy that rate down. So it's important to know, even though you do a one-time close, that doesn't mean that the fees only are assessed at the one time. The other thing, as I mentioned, with a one-time is understanding if you are locked in on the interest rate at that time of construction, or if at the time of modification that it will be adjusting, and then you'll need to make consideration when it comes to that if you're going to have to count for a different rate. So that's a one-time construction loan. Those are very common if you're working with, let's say, a large mortgage company. We have a lot of one-time construction deals that we do. The other option is a two-time construction loan. So that would be an example if you work with a local bank in your area and you go to them and they do it what's considered in-house. So they're the one managing the construction loan. They're the ones who are doing it. They're funding it there. So you have a construction loan. Once again, typically it's going to be about a 6 to 12 month construction loan. I recommend 12 months because life happens with construction, and they will be the ones dispersing the funds to your contractor and working with you. So what's the big difference between going the one time or possibly the two time with your local bank? Local banks sometimes seem to have more flexibility when it comes to the construction. Depending on your bank, and this is very few, but some banks do not require a general contractor. It's kind of crazy, I know, but they base it on the scenario, they base it on the client, they base it on just that everything in general doesn't make sense for them to proceed that way. When you're looking at larger companies, larger mortgage companies, those are going to require a general contractor and be a little bit more in detail. The disbursement process will be probably a little tedious, more tedious than just going to a local bank. So if you're looking from a standpoint that you want to sub out and do it yourself, then probably the two-time close. If you're looking from a minimal loan amount, you want to put or a minimal down payment, and you want to go that route, you're probably looking at something, an FHA. You can do conventional as far as 5% down, or the VA. The difference, once again, in the local bank, most local banks are going to want larger down payments, 15 to 20%. Whereas if you work with a mortgage company, you might find options with a lower down payment. All right, so now we've talked about that there are different programs from a one-time and a two-time. And when it comes to the terms, as I mentioned, there's options of a fixed rate. Sometimes with your one-time close, most of your local banks that do the two-time, that window is going to be based on prime. As of the day of this recording, prime is 6.75. They may have a margin to that. So your repayment with a construction loan is going to be generally based on an interest-only payment on however much you draw off of the line of credit. So if you've only drawn $100,000, you're going to pay interest on the $100,000 each month during the process. When you get into looking at what's right for you, once you determine if you're going one-time or two-time, the big question is, well, how much of a construction loan can I get? And your qualification for a construction loan is going to be very similar to if you were purchasing a home. We're going to look at the same debt-to-income guidelines as any of the programs would have to determine your affordability when it comes down to that. So you're not going to be qualified just on the interest only. You're going to be qualified on a fully amortized scale. And then a lot of clients, when they come, they want to know how much they can do, how much of a construction loan they can get. And so we back into that. And then a lot of times the question comes back to, are you going to be needing to purchase your land, or do you already own your land? And the reason that comes up is because if you already own your land, that is your source of down payment. So you can use that money if your home, let's say you own a piece of property and the land's worth $100,000 and you're building a $400,000 home. So you can go and apply for that construction loan for $400 and something thousand. You don't have to put 20% cash into it because you own the land already free and clear. And the first thing, if you don't own the land free and clear, that the bank or the financial institution is going to do is pay off your current land loan with that. So when you go into the construction loan, owning your land is ultimately going to be the easiest way to determine the loan amount that you're going to get. Now, if you're purchasing land simultaneously that you're doing the construction loan, then let's say you're purchasing the land for $100,000 and your construction amount to cost to build the home is $400,000, then you are going to have to bring money into the table. Once again, depending on the terms, that could be minimal, that could be 3.5%, 5%, or that could be 20%, just depending on the program that you go with. And then the construction loan is going to be set up. Generally, you're going to have your general contractor to give you a list of the draws that they're going to make and when they're going to request their money. Because from that standpoint, it gives the lender the ideal and it gives the contractor the ideal. I can't get any money until we've reached this level of a completion. And the bank would validate that by sending the appraiser out to do a list of all the completion, all the things that have been done, and then they compare that to the amount that you have on the construction loan left to disperse that money. So when you're looking at the ways that your construction loan is going to be used, once again, it depends on if you own the land or if you're purchasing it based on if you're going to have to bring money to the table or not. So when you look at it that way, it all is going to play a part. Now, let me hit a little side subject on that. A lot of people have family to deed them off property, and that's perfectly fine. And each guideline has their own thing in regards to it. It can be considered a gift. But it's very important, if that's the case, that a survey is done, it's done accurately. You have ingress and egress, which is access to the road. Sometimes you find family deeds property behind them, but they don't really give them access. So it's important to have that. But there's no problem if you have family that's wanting to deed you off property. Just make sure to take the proper steps, get it deeded over accurately, and you can still go forward with that. Next thing I want to talk about is my recommendation when you're doing a construction loan. So a lot of times people come to me and they just don't know. I'm a proponent, I mentioned earlier, about subbing it out yourself. I'm not a big proponent of subbing it out yourself unless you are in the trades and you know what you're doing. And there's a few reasons why I don't recommend that. Number one, If you're working a full-time job, you have a full-time job, plus you're taking on another full-time job to manage the construction of your home. The common theme is that you're going to save money by doing this. However, I have seen a lot of scenarios where people don't end up saving money like they think they will for a few reasons. Number one is the loan goes longer than they expect it to. And the reason that it goes longer than they expect it to because they don't have the ideal time frame, or they don't have contractors, subcontractors to show up when they would like for them to show up because they go to other places. So the property keeps getting delayed. They don't account for weather. They don't account for things like that. And the next thing you know, that it's delayed. The other thing is these subcontractors. A lot of times you think, well, if I cut out the contractors on ballpark 15%, then I'm saving that 15% going directly to the subcontractor. However, that's not necessarily the case. A lot of times when people go directly to that subcontractor is going to give them a bid. Yes, it doesn't count the 15%, but most of the time when they're working with a contractor, the contractor gets different pricing than they're giving someone that does a one-off project. Because here's the deal. The contractor is going to have another job for them, and they understand that, and they realize that. So when they do a one-off job for someone, they realize that's the only job they're going to get from that person, so they're going to price it likely different than they would a contractor. Oh, and by the way, when that subcontractor is on your schedule to be there, but their main contractor calls them to come and do a job, guess where they're likely to go? So that's another reason. You want to make sure using a contractor, they're licensed and insured. There's a reason they're licensed and insured. They have to go through proper steps to get that. And so it's important as you're working with a contractor that you do that. Give you a personal scenario. When I built my house, because my contractor was licensed and insured, there was a couple of circumstances where the workers got injured. His license or his insurance took care of the scenario. It didn't fall back on me as the homeowner. So when it comes to preference, I'm going to recommend that you do use a general contractor. So now talking about the cost to build and using a general contractor, there are generally a couple of different approaches that they will take with you in regards to the cost. Very few now, because the volatility of materials and pricing, will do what's called a lock and key. And that means they give you the contract, it's laid out with a budget, you guys have skimmed over it, and they say, we will build this house for $500,000. So it means as long as everything is in there, they don't vary, that's the price, it is what it is. They've agreed to do that. Their labor doesn't change, nothing like that changes. So that's a lock and key. It's not as common now as it used to be just because of the volatility of just labor in general, of materials. The other is a cost plus, which is more common. So that's where the contractor gives you the cost that it takes to, let's say, frame it, the labor, the material. They give you that cost, and then they add their contractor fee on top of that. Typical contractor fees are probably 10 to 18%. It depends on the market. If yours is different in your market, make sure to comment below. Let me know what it is. But that is a way for you as the homeowner to also stay into somewhat of an input phase to possibly get something at a lower cost versus what the initial budget comes in at. So for example, if your budget for appliances in your contract was $10,000, but you catch them on sale and you can get them for $5,000, that would be adjusted within your contract. And then there are a few handful of contractors that will bid on it either price per square foot. So instead of necessarily a fee on the cost of it, they'll take the square footage and they'll charge based on that. And then very few that I've ever seen just charge a flat fee to say, hey, your home's going to be $500,000. We're just going to charge you a flat fee of $35,000 to do the management of it. At the end of the day, you have to look at the contractor and you have to look at how involved they're going to be in the project. Are they going to be there quite often, or are they going to send a superintendent out? How often are they going to be there? If it's a lower fee, you're probably going to see them less. If it's a higher fee, you're probably going to see them more often. They're probably going to pick up your phone more often. So it's important when you're interviewing contractors to know exactly what's the case. All right, so let's wrap it up with how much should I get? So this is a common thing that I see as well. In the approval phase, we're going to pre-approve you based on your payment, what your payment can be approved for, right? You then have to do the research. You have to determine, okay, how much of a construction loan, how much of a house, talk to your builders, get all your budget in. Your budget's very important. It's very important that you stick to your budget. But I have a lot of people that come in and they say, hey, the home's going to cost me $400,000 to build. I've got $100,000 set aside, so I'm only going to get a loan amount for $300,000. That's not my recommendation. My recommendation is give as much as the bank will allow you to have, because there are things that are going to happen during your construction that you need to have a contingency plan for. My personal example is, as my house was being framed, my wife found out she was pregnant with my third child, and therefore, guess what? Things somewhat changed. So it was good that we took as much as the bank would give us on the construction loan, because it allowed us to make some tweaks, and you are going to bet that you're going to go over budget. So plan for your contingency, 5%, 10%. If you stay within 10%, that's pretty good. And that's why it's important, when you get your cost detailed lined out, stay on that budget. If you go tell your contractor, if you go tell your subcontractor you want to change something, that's going to cost you money. Make sure you know what it's going to cost. But if you have a $400,000 line of credit available, you only plan to use $300,000. At the end of the day, you don't have to take that final draw. You don't have to take out the line of credit, the full line of credit, because that's exactly what a construction loan is. It's a line of credit. If you get through the whole process and you only need to borrow $250,000, great for you. However, it's easier for you to have the line of credit available versus running out of the money and then going back to the bank and asking them for more money. So when you're going through the construction loan process, keep that in mind. Even though if you've got $100,000 setting aside to put into the project, you want to make sure you have more and above to account for that budget contingent, that overage on your budget when it comes to that. If you have more questions in regards to the construction loan or any other mortgage loan out there, feel free to shoot me a DM, leave a comment below. Let me know if you've been through the construction process, how it went. I have had multiple clients and I have multiple stories. Some clients, it's went wonderful. Some clients say they will never ever do this again in their life. So it's important, have all your details. Hey, right now we live in a world of AI. Go to AI, have it write you up a budget, let you know the details of the process, the phases of the process, so you can compare that to the bids and the quotes that you received.